G'day and welcome to the Investor Motivation Podcast. Today I've got with me, as always, on most weeks lately, Rach.
I know.
How are you?
I'm well. How are you going?
Good. Nearly knock-off time for you?
It is Friday afternoon. The month's nearly over too, which is feeling it.
End of the financial year, you're feeling it?
Yeah, feeling it.
Yep. Sounds like there's a holiday on its way. Rach, what are we chatting about today?
So a lot of people get fixated on the overall number that they need or think they may need in retirement. Mm-hmm. So they might say, I need $2 million or, that kind of thing, rather than breaking down the elephant.
Yes.
So we're kind of going to reverse engineer that and see, where that comes into play.
Yeah, terrific. And where this came about from was prior to Christmas last year, we had the client come in and I said, any regrets? And he goes, yes, we saved too hard when the kids were young. So without blinking an eye, it's something I've mentioned before. And I did a video on this on TikTok. Mm-hmm. And where I said, you can save too much for retirement, and that is often at the expense. Now, is there a good quote for that one, Rach?
Don't oversave your way into a life half lived.
Wow.
Ouch.
Yeah,
I read that one.
Yeah, I reckon that's an absolute blinder. And I sort of, within that video, said, you can oversave towards retirement at the expense of the half-lived life, which is, that's got a whole heap of regret in itself. And that's probably where my chap that I spoke to prior to Christmas come from. But out of that came, okay, Rio, one of the comments was, Rob, well, how much is enough? And
it's a really good question and a hard one to answer.
That's right. And the follow-up video I did really went through all the variables, the different things that need to take into account. And I think that's what this one's all going to be about. That it's it is how long is a piece of string. It depends on so many variables. Mm-hmm. And I'm pretty keen for us to go through that, and like we've done on this podcast in the past, really dismantle the myth that you need millions of dollars to retire in this country, and that is absolutely wrong. You do not need millions upon millions. Lovely if you can get there, but not at the expense of a life half lived.
Yeah, that's right.
Which is our new favourite quote.
It is.
Apparently.
Yes.
Yeah,
definitely.
So what are some of the variables that determines how much income people will need? So we're not focusing on the lump sum, we're focusing on how much income.
Breaking it down, Well, everyone spends differently. Everyone has different needs. Some might be more comfortable with just a modest lifestyle. Either is fine. So in that case, you might need, say, $45,000 a year might cut the mustard for you. Mm-hmm. Whereas if you're more active, kind of a lifestyle, you could need $80,000 plus. So obviously they're big numbers, that can dramatically change how much you'll need over the long term. Yeah,
and I had an interesting case study. It was only a couple of days ago where a couple, they were both 64, lovely couple, really happy couple, and they are living on about 36 grand per year.
Yeah, I can think of a client the same, and I love catching up with them. They're really refreshing. They've just, in my mind, I always say, you guys have nailed retirement, because they don't need much, and they are one of the happiest people that I've come across. So.
And I know the ones that I met with, they're getting by on a transition to retirement pension, and they're also getting some dividends from a reasonable size inheritance, not huge. And I said, when you get to age 67, you'll go into a full age pension. You'll get 46 grand per year. Yeah. You'll get this huge pay rise. You will not know what to do with it. It'll be. But one of their goals was, even at that age, that they were so content. They said, we want to help the kids out.
Yeah.
So obviously, big variable is how much you spend, and obviously that is different for everyone. Investment returns is a huge variable to determine. Obviously, I've probably veered off track a little bit where I spoke about income, but it's how much we need in total. And obviously the returns we get, has a huge impact. And the quote that I've ran with for many years, which I still think is very, exceedingly valid and will be forever, that it's a far greater risk in being, also let me reword it. Short-term volatilities are less of a risk than the eroding effect of inflation over the long term.
Yeah.
So put up with volatility, markets going up and down, you'll get a better return than, inflation eating and eroding the value of your money over decades.
Yes, yeah.
Yep. So investment returns will have a huge impact on the result. So everyone invests differently. People that come to us, we coach, educate, teach the way they should be investing over their lives.
Yes.
Yep.
Yeah.
What's next, Rach?
What your retirement goals are, I suppose, is in age timeline. So the earlier you retire, that obviously the more funds you'll need to back that up.
Yep.
And so that definitely comes into play with that as well. Australia's quite funny with, you mentioned it before, we're fixated on a set retirement age, whereas other countries aren't, which I think we can learn a lot from. So just because you get to age 65 or whatever the cliche may be, doesn't mean you have to retire. You might be happy to continue working in full capacity or some capacity, and that will obviously preserve for yourself now, but also, if you've got goals for the next generation. So
here's just based on that retirement age. What is the official retirement age in Australia? It's
getting younger, I believe.
But I suppose the point I was trying to make there is no official age.
No, but not officially.
Retire whenever you want.
Yes.
And I think this is where people get confused with super preservation age of age 60 or age pension age at 67. They're saying, well, the government's making us retire at X. Well, if you had enough money to retire at 30, you are allowed to do that. There is no rules.
Or you might be considered a black sheep if you love your work still at that age and everyone else is playing golf. So it's kind of a cultural thing here in Australia as well. I think.
So really that retirement duration, how long you're in retirement, has a huge impact.
Yes.
And if you're doing some part-time or not. And when we use our projectors, we often factor in, in the first 5 years of retirement, they say, well, I'm retiring from this work, but I don't want to get bored, so I'll do this part-time work. And we show the effect of earning 20 grand per year has on the long-term outcomes.
Can be quite significant there.
Quite substantial. So you can see that there is just so many variables to, there's no answer to this other than the Africa standard.
Yes.
I suppose this is some averages for us to think about.
Yeah, and you tread very lightly. You use those amounts with caution because, again, it depends on your own circumstances and what's important to you. And things like inheritance too, I know we don't like to lean on them, but they change things dramatically as well. So another variable that, we've just got no control over for each individual. So it's it is a pretty grey area at times, and that's why these projections and doing them ongoing as life change becomes so important to get that figure.
So while we don't like to talk about inheritance, it's something that we factor in to say conservatively that we'll put that in 15 years ahead, which gives them the confidence to spend a little bit more now. And obviously gifting to children to help kids out with to purchase a home, that can be obviously a very rewarding thing to do. It can be a key objective for some clients, but can also be quite dangerous as well.
That's right. If you're being too generous, there is such thing, then your own retirement can be affected, and how long you have to work and how much you need. So finding that balance again between enjoying gifting but also not at your own expense.
So to answer, how much is enough? If you have a couple retire, and this goes back to, the 650 grand in retirement investment asset superannuation plus age pension, for a retiring couple at age 67, as a couple, it's different for a single. 650 grand can do the job. That's right. And I think knowledge is power too, isn't it? If you know what the trade-offs are, then the amount can become different for everybody. So and that's where if you say, well, I don't want to retire on that comfortable $74,000 per year. I'd like $120,000.
Yeah.
Because the lifestyle is, includes 2 or 3 big trips overseas. Then you've got to work that into the numbers and prove that it can be done or can't be done.
Yes.
Or if someone says, I don't care if I get to 80 and I've spent the lot and I've just got the equity in my home.
Yeah, that's right. And
that's also a strategy. It's not wrong.
Yeah. Having a lot of conversations with clients too, that they are saying that they're quite comfortable to spend what they've got because their kids are well set up, and they aren't expecting anything or relying on it. So they want to see mum and dad, like I do with my parents, enjoy their wealth now.
Yep.
Rather than try to save it for us kids down the track. So
I think there's going to be a bit of a switch around there where moving forward, because of the high debt levels and the cost of housing now, that whilst perhaps my generation, a bit above and a bit below, are probably possibly better off than their parents at the same age, I've got a feeling that's going to switch around where the debt levels are going to be so much higher for the younger people coming through.
Yeah.
I think.
Yeah.
But that's what we're seeing in terms of young people having to buy a home now. The numbers are pretty high in terms of debt.
Yeah, they are. Yeah.
Yeah. Fantastic. What other factors should we take into account? I think Centrelink is a huge. It can make up a huge percentage of the income each year.
It can,
Yep.
yeah.
And I think the key thing that I like to remind the couples that I sit with, that you can, as a couple that own a home, you can have nearly $1,050,000, and anything below that, you start to get some pension. When someone dies, that higher threshold where you get some pension and when you don't drops down to just over 700 grand as a single.
Yeah.
So it's much harsher as a single, and not only is the assets test upper threshold and lower thresholds much lower as a single, the maximum you get for a couple is maximum pension's about 46 grand or 31 for a single.
Yeah, that's right. And as we've always said, you're still turning on the same amount of lights and paying rates and whatever else. Massive impact.
Fantastic. For those that, and probably some of what we've seen in practice, the people that have got more than what they need have sacrificed, having coffees down, the millionaire clients that we deal with, that we coach to them that you have enough to go and have a coffee with your friends and spend $4.50 or $5.
Yeah, that's right. And again, it's changing those behaviours, but showing them that they can and giving them the confidence, changing their ways after so long. Yeah,
the confidence and the permission to spend. What about the other ones that are the other way? I know we don't see these people quite as much, where they're overspending and running the risk of running out far too early. Is that where, is a spending policy something we consider there? So we've got something in writing that talks about if you take out too much? Yeah,
you can definitely go down that path. Physically showing them on the projector to go, not to scare them or create fear, but just to go, hey, if you keep spending at this rate and this is what could happen.
Yeah, so at least it's an informed decision.
Yeah. We don't want to be dictating anyone by the calculator and following them around with it, but from a broad sense, or if you're complacent with your spending and you don't have the means, then it'll catch up.
Fantastic. Yeah. So, but that's not generally what we see. We mostly are encouraging our people to live a full life, build the memories to reduce the regret.
Yes.
So I suppose to round off this chat, how much is enough? Well, it's just different for everyone.
I know. And that's great answers, hey?
Yeah, it's the classic non-answer that our industry is really good at, but everyone is different, and that's right. That's why it is like that. Yeah. Rach, how can people find you if they'd like to learn a bit more from you, apart from here on the podcast?
So Rach Todman on Instagram and TikTok.
Terrific. I'm on the same as well. Rob Goudie, should be able to find me. And of course, check out our YouTube channel. And we just ticked over 13 years. It came up.
Oh, really?
Some sort of anniversary on YouTube.
Actually, I was having a look the other day and I put it oldest videos first,
Oh.
and the 12-year-old Robert Goudie and Ashley Rowan from here looked a little bit different.
Looked a bit different.
So everyone do that. Check it out.
A lot more ums and ahs.
I didn't watch. I couldn't.
I can't watch the stuff I do now,
No, me neither.
let alone the stuff I did 13 years ago.
Yes. Yeah.
Thank you for encouraging everyone to do that. Thanks very much for listening in, and please feel free to throw a topic at us that you'd like us to cover if you have one. Thank you, Rach.
Thanks, Rob.
Thank you for listening.
Thanks, guys.
Cheers.
See ya.